Good afternoon, everyone. We have a lot of material to cover, so we're going to go ahead and get started right on the hour today. Just a little housekeeping before we get started. Please keep in mind that these webinars are intended for educational purposes only. Now, while we hope that you do learn new information, the trainers that present these webinars are not attorneys. Therefore, all information provided during the presentation and the Q&A session should not be construed as legal advice. All right, now that we got that out of the way, good afternoon, everyone. My name is Brianna Grimes, and I am going to be hosting today's mini series. We have quite a few states that we are covering today. We're going to be talking about Connecticut, Maine, Maryland, Massachusetts, New Jersey, New York, Pennsylvania, Rhode Island, and Vermont, and they are all having significant law changes coming up in 2021. Now, I am sure that throughout this session, you guys are going to have lots of questions. And so feel free to type your questions into the question box as we go through the presentation, and I will answer all of those at the end. Please keep in mind that these are, some of these are new and others are expanded laws. So they are still subject to legal interpretation in areas where they are ambiguous. So I will do my absolute best to answer your questions, but I am by no means an expert. So if there's any questions that I can't answer during our Q&A session today, I will make a note of those questions, and then I will go ahead and do a little research to make sure that I get you the correct answer, just because some of these laws are still developing, FAQs and legislation and things surrounding them. All right, so with that being said, let's go ahead and jump in. So today we're going to be talking about, in Connecticut, we will talk about the minimum wage and paid family leave. Oh, sorry, I just had a question pop up and I meant to address this, so thank you, Patricia, for bringing that up. I am still having technical difficulties with putting the PowerPoint handout on GoToWebinar for some reason. They're still trying to figure out why my account will not let you guys download it. So I will send a copy of the PDF PowerPoint slides after the webinar concludes today. And then the webinar is being recorded, so you will get a copy of the recording tomorrow. So all of that, those resources will be made available to you. All right, so in Connecticut, we are talking about minimum wage and paid family leave. In Maine, we're going to talk about minimum wage and their new Family Medical Leave Act. In Maryland, we're going to be talking about minimum wage. In Massachusetts, we'll also be talking about minimum wage and paid family leave. New Jersey, we'll be talking about minimum wage and the legalization of marijuana. In New York, we'll talk about minimum wage and paid sick leave. In Pennsylvania, we'll talk about a new minimum salary threshold. In Rhode Island, we'll be talking about minimum wage changes, and in Vermont, we'll talk about minimum wage changes as well. So lots of minimum wage changes this year, or this upcoming year. All right, so let's start with Connecticut, and their minimum wage is changing. So beginning on August 1st of 2021, the minimum wage in Connecticut will increase to $13 per hour. Now that is August 1st of 2021 that goes into effect. So you've got a couple more months if you have any employees or you function out of Connecticut to get that increase changed. Something to keep in mind is that the state of Connecticut will be increasing its minimum wage each year going forward until the last increase in June of 2023. In 2023, they are aiming to have the minimum wage reach $15 an hour. In addition, starting in 2024, the minimum wage will be adjusted annually based on the Employment Cost Index calculated by the Department of Labor. So minimum wage changes in Connecticut is going to be an ongoing thing for the foreseeable future. So as far as action items go, you need to go ahead and be sure to conduct a wage audit to identify any employees that will not meet that minimum wage in 2021, and just prepare to adjust their wages so that way their new pay will go into effect in August. All right, the second major update in Connecticut is their new Paid Family Leave Act. Now, this law covers all employers with one or more employee in the state of Connecticut. So even if you are an employer, let's say out of another state like New York or Pennsylvania, and you have at least one employee in Connecticut, you have to offer this leave to your Connecticut-based employees. Employees are not eligible to be paid out any of these leave benefits until January of 2022. So these aren't going to go into effect until January of 2022, but the employee deductions are starting in January of 2021, which is why we're talking about this today. There are specific specifications regarding the deductions that are coming up in January. So the deductions are capped at 0.5%, and they apply to each employee's wages up to the Social Security contribution base, which as of 2021 is set at $142,800. Now, for employers who are participating in this program, they can privately offer benefits comparable to those. So you can either offer this leave or you can offer it privately through your organization. Beginning on November 1st of 2020, employers were able to start registering with the state to enroll in the program. So if you are looking to enroll in the program, I advise you to go online and register, as that did open in November. Registration is completed via the Connecticut Paid Leave webpage that they have dedicated on their state website. As an alternative to registering for the program, employers also have the option of purchasing their own private insurance plan to provide paid leave benefits to their employees. So if you choose to offer a private paid family medical leave plan, it just has to meet the minimum qualifications under the Connecticut Paid Family Leave Plan, and you will have to apply to the state for an exemption from this program. Now, the Connecticut Paid Leave Authority is currently developing this application process for exemptions. So if you are going to opt in to an exemption, you may have to wait a little bit because they have not released that form yet. If the private program is comparable to the state's plan and a majority of the employer's employees have agreed to the plan, the employer may then be issued the exemption, and that's something that they are working on applications for. So as far as action items go with the Connecticut Paid Family Leave, employers should either register for the program if that is something that you're going to opt into and you are not going to purchase that private paid family leave plan, or keep an eye out for that exemption form. We're hoping to see something released by the state by either the end of December, which is coming up here pretty quickly, or at least the first month of January, so employers can start applying for those exemptions from the deductions. Also, employers should look to provide written notice of the new deductions to their employees so they understand that their paychecks are going to be deducted via the state in order to fund the paid family leave. And then finally, employers should ensure that they do begin the deductions on January 1st of 2021. I definitely recommend reaching out to your payroll provider if they are not pay entry, just to make sure that these deductions are scheduled to begin at the start of the new year so you are compliant. All right, let's move on to Maine. So beginning on January 1st of 2021 in Maine, the minimum wage will increase to $12.15 per hour. So this one is taking effect in January versus Connecticut was taking effect in August. In addition, the minimum exempt salary threshold is now based on the new minimum wage. So the threshold is $700.97 per week, or $36,450 per year. Now, this salary threshold is higher than the federal salary test, so the state minimum salary will now take precedent. So basically, if you're paying anyone as an exempt employee, the minimum salary that they have to make, if you're going to categorize them as exempt under the FLSA, is $36,450 a year in the state of Maine. Essentially, that's what that change is doing. Now, something to keep in mind is that the state will be increasing its minimum wage each year going forward based on the cost of living index calculated by the Department of Labor. So again, another one of those states where the minimum wage will more than likely be changing every year to keep up with the cost of living in that state. So as far as action items go, be sure to conduct a wage audit to identify any employees that will not meet that minimum wage in 2021 and prepare to adjust their wages. As well, go ahead and go through all of your salaried employees and make sure that they are meeting this new annual salary threshold. And if not, you may need to consider either bumping up their salary or recategorizing them to a non-exempt hourly employee. All right, so the big law change that we're seeing in Maine this year, and it's gaining a lot of attention, is their new paid leave law that really qualifies as really more of a mandated PTO law, but it's being called a leave law. And before I go any further, I want to mention that quite a few of the states that we're talking about today have passed different types of leaves. We just talked about Connecticut family leave, Maine's got their own earned leave, and then we're going to talk about New York that's also got a sick leave. So all of these leaves are separate, and I know if you are a multi-state employer, this may get a little confusing. So just kind of bear with me. And if you have questions on any clarifications that you need, definitely let me know, because I'm going to try to separate things out and make it as clear as possible, because we are going to be talking about a lot of different leave laws amongst these different states, and they're all going to sound completely different. They don't have the same qualifiers. A lot of them function differently. So again, use that question box if you need any clarification, especially if you're a multi-state employer, because I want to make sure that you're not confused at the end of this presentation. Okay, so in Maine, they have an Earned Leave Act, which, like I said, it's more like a mandated PTO law, and we'll talk about why. So this law essentially, it's going to go into effect January 1st of 2021, so right around the corner, and it requires all employers with 10 or more employees, and they define it as 10 or more employees in the usual and regular course of business for more than 120 days in the calendar year. So if you're in an industry that deals with a lot of seasonal workers, if you have more than 10 employees for at least 120 days out of the calendar year, you qualify under this law. And that includes all employees, so full-time, part-time, per diem, students, non-citizens, and even domestic workers, as long as they make $1,000 a year minimum. They are eligible to be counted in your 10 employee count. Now, for this particular act, there are several exemptions to this law, and essentially they are seasonal workers, independent contractors, employees working fewer than 120 days in a calendar year, and then any workforce that is covered by a collective bargaining agreement effective January 1st of 2021. So if none of those exemptions apply to you, you can completely ignore them. You have to provide this earned leave. If any of those exemptions apply to you, you may not have to provide this leave. And employers must pay employees their regular base rate of pay, including bonuses and commissions. So calculating the base rate of pay requires dividing the total earnings that they have for the week prior to the leave by the number of hours that they worked. Now, legislation and the politicians have noticed that this has the potential for employees to take a leave at an increased rate of pay if they received a bonus or a commission or any type of overtime or anything in the week prior. So the Maine Department of Labor has acknowledged that this is a potential problem, but they have not adopted any rules to prevent this possible manipulation. So as we go into January and we have to start offering this benefit, just keep that in mind, that some amendments may be coming in order to protect against the abuse of that type of pay. All right, so as far as specifics of this law goes, the Department of Labor published the outline for this law on September 14th of 2020, and this is kind of the general outline that they have provided. They haven't really amended it since they published it in September, but we are, again, like I said, looking for a couple amendments here and there to protect employers from employees possibly abusing the policy. So as far as this leave goes, employees will accrue 1 hour of leave for every 40 hours worked, and employers can restrict the use until their 120-day of employment mark. However, the employee must start accruing their leave at the time of hire. So they can accrue their leave beginning day one that they start working for you, but you can say, hey, you can't use this until 120 days of employment. That is 100% legal under this law. Additionally, employers have the option to front load 40 hours at the beginning of the calendar year or on the employee's anniversary date, just as long as the employee will receive the same amount of leave as they would if they accrued. So as long as they're equal, hours for hours, then you're fine. You just have to be compliant with the number of hours that they would receive in the year. If you decide to front load and an employee terminates his or her employment prior to working enough hours to earn that time that was already taken, then the employer may deduct unearned leave from the last paycheck. So you also have that flexibility that you don't miss out on a loss if you front load and lose an employee. Now, any unused leave may be rolled over from year to year. However, the employer does have the ability to cap that rollover at 40 hours per year. So you can make sure that they don't roll over any more than 40 hours from one year to the next. Now, at the time of an employee's termination, if the employer has an established policy or practice of paying out vacation time upon termination, then the same policy will have to apply to the earned paid leave benefit because it is an earned leave. So if you already pay out PTO, you'll have to pay out this leave as well. If not, then you're not obligated to pay them out upon termination. However, just keep in mind that if you do not pay out any unused leave under this law at the termination of the employee, and then the employee comes back to work for you within a 1-year period of from their termination, then you will have to give them back any hours that they had at the time of termination that was not paid out. So let's say they had 20 hours left in their bank, but you don't pay out any leave at time of termination and they come back in 6 months. As soon as they hit that first day working for you, that 20 hours has to be put back into their bank because they are entitled to that leave because they earned it. So in addition to those types of specifications surrounding the leave, the Maine Department of Labor has also issued some administration guidelines surrounding this leave. So notice due to an emergency must be considered reasonable. So notice for using this leave has to be considered reasonable. However, the new law doesn't really define what reasonable is according to the state. So that's really at your guys' discretion in terms of what's reasonable notice for an emergency. Now, absent an emergency or emergency circumstances, you are also required or you may require up to 4 weeks notice of an employee's intent to use earned paid leave. So you can allow your company plenty of notice in order to provide this leave and allow the employees to take it. Also, employees may use the earned paid leave in increments of at least 1 hour unless the employer chooses to allow smaller increments. So if you want to allow them to use it for 30 minutes at a time, you can, but the minimum is 1 hour increments. You can't require more than that. Now, unless the leave is for more than 3 consecutive days, you are not permitted to require a medical note or any other form of documentation. And a poster update is going to be required to notify employees. A copy of the poster can be found on this link at the bottom of the slide. Again, you guys will get a copy of these slides, so you can literally copy that link, type it into your browser, and it will give you a copy of the required posting. Now, as far as action items go, first things first, definitely figure out if your organization meets the qualifications or if you fall into any of those exemptions that we talked about earlier. Then you're going to want to decide if you want to front load the leave time or if you want to accrue it. If you are a pay entry payroll client and you have employees in Maine or you are an employer based out of Maine, you can reach out to your payroll advocate and let them know which you would like to adopt, and we can set it up in your system free of charge. So if it's an accrual, we'll set up the accrual for you to make sure it's compliant, or if you want to front load at the beginning of the calendar year, we can set that up as well. Also, once you have that decided, you will need to update your handbook with the new leave requirements, guidelines, and regulations. This is probably going to be an entirely new section in your handbook, and our HR services team can definitely help you with that. So feel free to reach out to myself or Kathy at the end of this presentation. And finally, communicate the new policy with your employees. This due date is coming up rather quickly, so I would recommend making this a priority so you can give yourselves time to get all the policies in place, as well as have time to communicate with your employees and address any questions that they have. All right, next we're going to talk about Maryland. So really not a lot of legal activity in the state of Maryland. The main thing that is changing is their minimum wage. And beginning on January 1st of 2021, their minimum wage is increasing to $11.75 per hour. Now, minimum wage is going to be increasing each year going forward until the last increase in January of 2025. In 2026, they are aiming to have the minimum wage reach that $15 an hour mark that a lot of states are shooting for right now. And the next minimum wage change will not happen until January of 2022. In 2022, it is going to jump to $12.50 an hour, so quite a big jump there. So as far as action items go, again, just make sure that you are conducting those wage audits and making sure that you are compliant with any minimum wages that are changing in your state and adjusting those wages to go into effect January 1st of 2021. Also, knowing that there is going to be that large jump in minimum wage in 2022, you can also start preparing for that payroll increase and strategize with your leadership team how many employees are going to need that jump or a bump in their pay in order to meet that $12 or $12.50 an hour that's going to be starting in 2022. And it may be easier for you from a budgetary standpoint, to raise the pay rates every 6 months until 2022 instead of doing that large jump at the beginning of the year. So kind of you can take a look at that and really start strategizing because that is coming in 2022 in Maryland. All right, so next we're moving on to Massachusetts, and beginning on January 1st of 2021, their minimum wage is changing as well. It's increasing to $13.50 an hour, and tipped employees will now receive $5.55 an hour. Now, minimum wage is going to be increasing each year in Massachusetts as well until into January 2023, when they are aiming for, again, that $15 an hour that a lot of states are trying to reach. The next minimum wage change is not going to happen until January of 2022, and then it will jump to $14.25 an hour. In addition, at that time in 2022, tipped employees will reach $6.15 an hour. So again, same action items as Maryland. We're going to conduct those wage audits, make sure we bump the pay for anybody who needs to meet it, and we're going to strategize for those large jumps coming in 2022 for these states that are shooting for that $15 an hour. All right, next, the big one in Massachusetts. We're going to talk about the paid family leave that is going to come into effect January 1st of 2021. Now, this law states that all private employers must provide up to 26 weeks of paid family and medical leave to eligible employees. This leave is funded through a payroll tax that should have already started being deducted from your employees' paychecks back in beginning of 2020. And additionally, the Department of Family Medical Leave in Massachusetts has finally released their regulations surrounding the leave, their final regulations on July 24th of 2020. So they've given us a couple months to really take a look at all of the requirements and just make sure that we can stay compliant. So these do go into effect January, and we're just going to do a quick review of them today. Now, employers do have the option of offering this program either through the state or providing equivalent benefits to their employees through an approved private plan or a self-insurance plan. The department has modified the regulations concerning exemptions through a private plan. So if you are looking to opt into that, go ahead and take a look at those regulations that have been released on their website. Per the paid family leave regulations, all employees, covered workers, and former employees must be included within that private plan. So just kind of keep that in mind. There are a bunch of those regulations. So again, I just encourage you to research that extensively before you choose to go that route. All right, so there were a few changes or clarifications that were made to those regulations that were released in July. We're just going to review them because these will go into effect in January. So covered individuals are to provide notice to their employer prior to applying for this benefit. The department through the state will either reject the benefit application if there is no proof of the notice. So covered individuals must submit benefit applications at least 30 days in advance of the anticipated leave, but no more than 60 days in advance, which is really kind of an oddity because we don't really see a lot of caps on how long in advance you can request a leave, but Massachusetts is putting a cap on either end. So no later than 30 days and no more than 60 days in advance. So they have between 31 days prior to their leave up to 59 days prior to their leave that they can submit the request for the leave with the state. And in the final regulations, they also provide that covered individuals may file applications as soon as practical. So if for whatever reason the employee is unable to meet the filing deadline for reasons that are considered reasonably beyond their control, the state may make exceptions. So just kind of keep that in mind if for some reason the state does accept some type of leave that is not within that 30 to 60 day time period. Now, the new regulation also allows the use of intermittent leave in 15-minute increments consistent with the employer's policies that are provided. However, that payment of the paid family medical leave benefits by the department will not be made in requests of less than 8 hours. So if they are taking intermittent leave, they will have to accrue 8 hours worth of intermittent leave to get that amount paid out by the state. And finally, the weekly benefit amount is calculated on the individual's average weekly wage at the time of the filing of the leave request, which is determined by the individual's earnings in the base period as reported to the Massachusetts Department of Revenue. All right, next we're going to be talking about New Jersey. So beginning on January 1st of 2021, the minimum wage will be increasing to $12 per hour. In addition, seasonal or small employers, which are defined as less than 5 employees, will have a minimum wage increase to $11.10 per hour. Now, minimum wage is going to be increasing each year going forward in New Jersey as well until the last increase in 2024 when they are shooting to hit that $15 an hour mark as well. The next minimum wage change is going to come in 2022 when they jump to $13 an hour, so a whole dollar an hour raise coming in 2022. So again, as far as action items go, same as the other ones, go ahead and conduct those wage audits and make sure that you are compliant with the new minimum wage laws that are in effect in January 2021. All right, so the next thing we're going to talk about is very ambiguous update from the state of New Jersey. So on the ballot in November, there was the legalization of recreational marijuana. And based on the preliminary results, the ballot question passed by an overwhelming margin. However, we do not have any more details than the fact that it was passed because there have been significant legislative delays. So despite the passage of the ballot in question, recreational marijuana is not yet legal in the state of New Jersey because the politicians have not dubbed it so. However, once confirmed, the legislature or the Attorney General office must enact official legislation in order to implement the legalization and decriminalization of marijuana. In addition, New Jersey officials will begin establishing rules and regulations governing the legalization of marijuana, as well as what they're calling a marijuana market, as they are really kind of emphasizing the economic side of the law, and this is where we're anticipating these legislative delays are coming from. So until such legislation and regulations are announced, there's really no changes to marijuana law in New Jersey effective January 1st of 2021 unless we hear otherwise. But as of right now, if they haven't released anything, I highly doubt they're going to release anything in between all the holidays. So just kind of keep that in mind if you are an employer in New Jersey or you have employees in New Jersey. Even though technically it was voted to make recreational marijuana legal, it is not legal yet because there really isn't any law governing it yet. So just kind of keep that in mind if any of your employees, decide to recreationally use it and come to work. It's still not legal yet, so they just need to wait until we get the green light from the politicians saying, hey, this is the law, this is what it's going to outline, this is the age, and all those good details that we're looking for to make this an official law. So as far as action items go, basically nothing big. Just stay tuned for legislative updates on this law as they are released. Also, anything that you read in like news, blogs, and things like that, take it with a grain of salt. If it doesn't come from a legal firm's blog or there's not lawyers talking about it, or it's not a webinar hosted by a reputable group, anything that they put in the newspaper or the magazines or on TV or anything like that, again, just take it with a grain of salt if it's not coming from a trusted legal entity, because I did in my course of the research saw a lot of blogs that were convinced that marijuana was going to be legal in New Jersey effective January 1st, and you will see that there's not any legal announcements or anything really credible out there to support that. So just kind of keep that in mind. All right, so next we're going to be moving on to New York. So beginning on December 31st of 2020, so the end of this year, the minimum wage will increase to $12.50 an hour for everywhere outside of New York City. In addition, Long Island and Westchester counties are raising their minimum wage to $14 an hour. So again, as far as action items go, just make sure that you're conducting those wage audits and making sure you're compliant and paying your employees. This one's a little bit different because again, it goes into effect December 31st of 2020. So just make sure that you are paying your employees accurately on the last day of this year. Kind of a weird time to put in a minimum wage, but hey, New York likes to do their own thing and we support them and love them for that. All right, so next we're going to be talking about the New York paid sick leave law. Speaking of New York doing their own thing, because this is a prime example. So this law went into effect technically this past September, but it is going to be fully implemented effective January 2021, which is why we're going to be talking about it. So beginning on January 1st of 2021, New York employees can start to use what they're calling the New York State Sick Leave Benefit. You'll see it annotated as NYSSL because we do like our acronyms in HR. And the amount of New York State sick leave that employees will be entitled to will vary based on the employer's size and based on the employer's income, which is really confusing. So I'm going to try to break it down as best as I possibly can to make it less confusing. So here are kind of the categories of how much sick leave employers need to offer based on these qualifiers. So if your company has 100 or more employees, you are required to provide 56 hours of paid sick leave. If your if your company has fewer than 100 employees, so 99 employees or less, you must provide 40 hours of paid sick leave, and this is per year. So 56 hours if you're 100 or more, 40 hours if you're 99 employees or less. Now here's where it gets a little confusing and is very specific to New York. So if you are an employer with fewer than 5 employees and you have a net income in excess of $1 million a year in the previous, $1 million in the previous tax year, you must provide 40 hours of paid sick leave per year. If you're an employer with less than 5 employees and your net income is less than $1 million in the previous year, you have to offer 40 hours of unpaid sick leave. So if you have those less revenues but the same employee count, so if you have 4 employees but your revenues in the past year were less than $1 million, you can offer the sick leave, but it does not have to be paid. All right, so how does this leave work? Well, the New York sick leave will accrue at a rate of 1 hour for every 30 hours worked, unless an employer elects to front load all the sick time at the beginning of the year. So you do have the option to front load your sick time. If you choose the accrual method, which is the 1 hour for every 30 hours worked, then you should have already started accruing when the law went into effect on September 30th of 2020. So if you did not choose the accrual method and set that up at the end of September, it might be easier for you just to front load at the beginning of January and give them all of the hours ahead of time because they can't even use the hours until January. You can try to backdate the accrual. You'd have to work with your payroll specialist. If you're not a pay entry client, you'd have to work with your payroll company to kind of figure out how that works. But I think for ease of transition, I would recommend just if you haven't set up the accrual method, do the front load method going forward and just kind of save yourself the hassle. So these hours that did accrue from September to December, if you did the accrual method, will roll over and they can start to be used January of 2021. So again, none of these hours can be used until January 1st of 2021. So as far as the New York sick leave can be used, what it can be used for, it can be used for employees' mental or physical illnesses or injury, or even diagnosis, care, treatment, or preventative care for their mental or physical illness or injury. It can also be used for a covered family member's mental or physical illness or injury, diagnosis, care, treatment, or preventative care for a family member's mental or physical injury or illness. It can also be used for absences related to the employee's status as a victim of domestic violence, family offense, sexual offense, stalking, or human trafficking. And it can be used for absences related to a covered family member's status as a victim of domestic violence, family offense, sexual offense, stalking, or human trafficking. Additionally, employers may also set a reasonable minimum increment for use, which cannot exceed 4 hours. So for example, if you wanted to make the minimum increment of 2 hours, that would be fine, but you can't make the minimum increment like 4.5 hours. So anything under 4 hours, you can make your minimum increment. And the state has mandated that the hours must be carried over from year to year, and employers may cap this at the number of hours the employees can use in a calendar year. So for example, if you have 100 or more employees and you're required to provide 56 hours of the paid sick leave, like we talked about on the previous slide, then you can cap your employee carryover each year at 56 hours of paid sick leave, but you can't cap it at less. So you couldn't cap it at 30 hours. So the minimum cap has to be the number of hours that you are required to provide in a year. Also, employers cannot, cannot set a sick leave usage waiting period for new hires. So employees hired on or after January 1st can use their New York paid sick leave as it accrues. So there isn't, like we talked about, I think it was Connecticut, where you can't use it until that 120 day. That is not legal in New York. As soon as they get hired in, they are eligible to use this time as they accrue it. So keep that in mind too. If you front load it and you give them all 56 hours, they could use all 56 hours in the first, couple weeks of employment. So that kind of applies more for the front loading, but also the accrual. They are allowed to use it right out the gate. Also, employers do not have to pay out the sick leave that remains at the time of termination. So that was something we were waiting on clarifications on, and the state of New York did add this in their most recent FAQ that was updated in October, just to clarify, and the paid sick leave is not required to be paid out. So that is kind of a relief to some employers that they don't have to pay that out if the employee leaves. So as far as action items go, reviewing your handbooks and updating them with the new policy pertaining to paid sick leave, if you have not done so already, is going to be a must. Make sure your employee handbooks are compliant, and you have that resource and information available to your employees. Also notify employees of their rights to use the sick leave time effective January 1st of 2021 if you have not already done so. If you did choose the accrual method that started in September, you do need to notify the employees of the amounts that they have accrued so far and where they can locate those accrual amounts, either on your HRIS system or on their paycheck, things like this, basically things like that. But just basically somewhere they can find it. Be sure to notify also that your employees which method you are using, so they do know if they are accruing these hours or if they are going to be front loaded each year. You are able to change your method at the end of the year. So for example, if you did the front load method through 2021, but at the end of 2021 you wanted to amend your handbook and say, hey, we're going to move to the accrual method in 2022. That is totally fine. You just can't do it mid-year. So you will have to wait until the year has ended, the accrual period has ended, and then you can change methods if you want to, as long as you stay compliant and the employees don't miss out on any hours. Also, last but not least, just be sure to stay on top of your accrual process and remember that your accruals must start on day one for all new hires. And this is something that you can set up with your payroll provider. So just make sure that you ask them about it, test it out, and verify on the first couple paychecks of 2021 that the accrual method is working, and the employees can see kind of what they're getting. All right, next we're going to be talking about Pennsylvania and their minimum salary threshold changes. So we kind of talked about this a little bit earlier, that minimum salary threshold changes deal with your exempt employees. So if you are paying an exempt employee, there is a minimum salary required that you have to pay them, as long as it is higher than the federal salary standard, which this one now is. So beginning on October 3rd of 2021, so they're giving you 10 months into the new year, to kind of, reclassify your employees and see if you're going to be able to be compliant with this. The minimum salary threshold is going to be increasing to $780 a week, which is $40,560 annually. So that is the minimum amount that you have to legally pay your employees if they're going to be exempt employees in the state of Pennsylvania. This state salary test, it is higher than the federal test, and therefore this will take precedent. So this is the new minimum in the state of Pennsylvania. The new regulations also modified the duties test for the PMWA's white collar overtime exemption. And while these changes were reportedly designed to be more closely tracking with the FLSA companion exemptions, there are still differences between overtime exemption tests under the federal law and the Pennsylvania state law in a number of critical areas. So if this is something where you're looking at your salaries and you may need to reclassify employees, or you may just want to look at your classifications, or you're doing a classification audit, definitely check out the Pennsylvania new classification test, because they do, like I said, they do mirror the federal test, but there are some very nuanced differences depending on your industry, and there's just too many to be an expert on, to be 100% honest. They have a lot of critical areas, and there's just so many different industries in each individual state that they have to cater to. So I would highly recommend that if you're questioning any of your exempt status employees as to whether or not they should be exempt, I would definitely check on your state website and just make sure that your specific industry is not covered in any of those testing differences before you reclassify anyone. Now, keep in mind that this change is one of the first in a series of salary changes, and this is one of the first states that we're seeing that is going to also be mirroring their salary changes like other states are doing with their minimum wage. So this minimum salary threshold is going to change again in 2022, and then starting in 2023, the salary threshold is going to be adjusting automatically to equal the 10th percentile of all Pennsylvania workers who work in salaried positions. I don't know how they're going to gather that data, but they should be announcing it every year as to what the new threshold is going to be. The only other state really doing this is Washington right now, so I'm not really sure if this is something that's going to trend or if other states are going to pick this up. This is kind of a newer thing that we're starting to see, but these automatic adjustments are supposed to, I guess the intent behind these adjustments is that employees whose salaries are in the bottom 10% of salaried employees in the state will need to receive compensation increases to bring them up to kind of everybody else's level. So essentially, this is a new strategy for more pay equality. All right, so what are the action items you need to take as employers in Pennsylvania? Well, again, be sure to conduct those wage audits to identify any employees that will not meet the minimum salary threshold. Now, remember, this is for exempt employees only. So when you're pulling these reports and you're doing this audit, only pull your salaried employees. Otherwise, you might be confusing yourself if you're looking at hourly employees. That includes overtime and things like that. So just make sure you are looking at your salaried employees only, and decide if you're going to reclassify them to hourly or if you are going to bump up their salary if they're not meeting this $40,000 minimum, and that needs to be increased and go into effect by October 3rd of 2021. All right, coming up on it. We're almost done here. All right, so the next state is Rhode Island, and there's not really a lot of activity in this state. Again, it's really just the minimum wage increase. January 1st of 2021, we're going to see an increase to $12 an hour for minimum wage and $6.50 an hour for tipped employees. There are additional changes that are happening in Rhode Island. Again, they're another one of those states that are shooting for that $15 an hour minimum wage by 2024. And then every year after 2024, they will be increasing the minimum wage based on the cost of living calculated by the Consumer Price Index in the state of Rhode Island. All right, so as far as action items, again, lots of wage audits going on in a lot of these states. Just make sure that you are compliant with paying your employees correctly. And then finally, we are going to wrap it up with Vermont. Again, not a lot of legal updates in Vermont, just that minimum wage changing. In Vermont, January 1st of 2021 is the effective date for this change. Vermont's minimum wage is going up to $11.75 an hour, and tipped employees to $5.88 an hour. Vermont is also one of those states that is shooting for the $15 an hour. In 2022, they are going to increase it to $12.55 an hour. And then after that, they haven't released an increase schedule, but they said that they want to increase it annually based on inflation until they reach $15 an hour. More than likely, they are going to adopt one of their neighbor states' policies at the dollar an hour increase until $15 an hour. But as of right now, the only increase that we have confirmation on is 2021 and 2022. So we'll be waiting on a little bit more legislation to come out and kind of give us an idea on where Vermont is scheduling to take their minimum wage. Again, as far as action items go, just make sure that you are doing those wage audits as needed to make sure that you are compliant. All right, I know that was a lot of information. and a lot of different states that we covered today. So take a second right now. If you have any questions, go ahead and type them into the question box, and I will try my very best to answer them. Remember, these are new laws, so there may not be any legal guidance on questions that come up, but I will definitely do research on anything that I don't have immediate answers to. And just as a reminder, this presentation was recorded and it will be available to watch again. To do that, you can visit www.payentry.com. Hover your mouse above the webinars tab at the top of the page and click on webinar recordings. The most recent recordings will always be on top, and they're usually posted within 24 hours of the live webinar. You will also be emailed a copy of the webinar recording tomorrow afternoon, and I will be emailing you a PDF copy of these slides because of our technical difficulties, and I will get that out to you within the next hour, I promise. All right, let me see if we've got any questions. All right, will you be adding the new Maine SUI associated tax for the first of the year? As far as I know, yes. I will confirm with our tax team and make absolutely sure, but more than likely, yes. Our tax team is very on top of the state updates, so the SUI tax should be added by the first of the year. All right. Do any of the state minimum thresholds have any language about commissions versus regular salaried? So if you have a commission-based employee, they should not be FLSA exempt employees. So commission is different than having a salary, because having a base salary means that they have a guaranteed paycheck. So if you have a commission employee that is classified as salaried or exempt, they are probably misclassified. But if they are commission-based, they would not have to meet that minimum. So I hope that answers your question. If you have a specific question or it's very specific to your industry, shoot me an email after this presentation and we can kind of go through it. But usually the commission-based jobs do not have to meet a minimum because it is based off of, usually it's sales. So it's usually based off how much they sell. And you can't guarantee they're going to sell any particular amount unless you make them salary, which would be a different classification. All right, looks like, well, those are the only two questions that we had. So thank you guys for joining us today. Last week is the final installment of our state legal updates. We're going to be talking about Illinois, Michigan, Missouri, Montana, and Wisconsin. So a lot less states than today's presentation. But if you do have any other additional questions, feel free to reach out to me at my contact information at the bottom of the slide. Another thing I wanted to quickly talk about, we actually did get some clarifications on the bill that the I'm losing my words right now. The stimulus bill, thank you. Stimulus bill for COVID, as well as the expansion and extension of FFCRA. So we are going to have a webinar on that next week. I have added the link to the webinar registry in the chat, so you guys all should see that. Copy that link. Register for that webinar. We are going to be talking about everything that has come in the stimulus bill, the extension of FFCRA, what that means for employers, and things like that. So definitely join that webinar. Kathy and I are going to be chatting about that next week, and we will go ahead and give you a lot more information on exactly what the government is doing and how COVID and all that is going to be affected going into 2021. I had another question pop up. I looked through past webinars and don't see any updates on Texas. Correct. So if you do not see your state on any of the previous updates, that means there were not any major employer-based legal updates for this year that we saw. So any states that were not included didn't have any major updates worth talking about, or any that had affected employers. Some of the legal updates may have affected taxes, or they may have affected, legal representation and things like that, but not necessarily employer or HR updates, so they would not be included. All right, guys, well, that about wraps it up. I'm going to stay on for a little bit longer just so you guys have access to that chat link. If you do need a copy of the link or you can't see it in the chat for whatever reason, feel free to reach out to me at the end of this webinar, and I will send you the link directly. But I highly recommend you join that webinar next week to talk about the FFCRA expansion and extension into 2021, the stimulus package, the loan forgiveness, and all of that super fun stuff that will be catapulting us into 2021. So you guys have a great rest of your day and a happy holidays. Enjoy any long weekend that you all will be enjoying this week. All right, bye-bye everyone.